We've been fortunate at SkyBridge, or more importantly, our investors have been fortunate over the past 6, 7, or 8 years, in that we've substantially benefited from the evolving regulatory landscape in Washington. Our second largest thesis today, financials via TRUP CDOs, is directly benefiting from regulatory relief for regional and community banks. But more broadly, what we've seen since the crisis is a movement by both parties, both of the current president and the last president, to limit the risk-taking activities of the too big to fail broker-dealers, the Bank of Americas, the Wells Fargos, the Morgan Stanleys. And so what you effectively have seen is, from the pre-crisis peak of 27% to now less than 1%, that's the ownership of the U.S. high-yield bond market by broker-dealers, the major 10 dealers. Between Dodd-Frank and Basel III capital standards, you've driven their risk-taking activity out of markets, what is referred to as proprietary trading. So the vast majority of the strategies we focus on, structured credit, which includes RMBS, CMBS, and CLOs, TRUP CDOs, convertible bond arbitrage, volatility arbitrage, to a lesser extent, even event-driven equity, these strategies do not have competition from Wall Street banks, which is very different than the pre-crisis period. So given where we are in a cycle, that's a very important benefit to us. And we would say, if you take this further, some would say, hey, wouldn't it be better if banks didn't participate at all, right? Instead of being 0.5 or 1% of market ownership, wouldn't it be better if there was zero? And the answer there is no, because banks fill an important role making markets. And so we can say, even though we're 95% confident the teeth of Dodd-Frank and the teeth of Basel III will keep banks out of being prop traders again, the change in regulatory tone out of DC is now allowing them to make markets with more confidence. So we're threading this needle where we want the too big to fail banks to still have the pressure from the government to not be making speculative investments from FDIC insured deposits, at the same time allowing them to make markets for their investors or customers, in this case the hedge funds we invest in. So that is the big picture for how we've benefited from regulatory relief. And fortunately, we don't see that changing anytime soon.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Multi-Advisor Hedge Fund Portfolios Series G and the SkyBridge G2 Fund, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.